Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, April 17th, 2009. Well, we're seeing a nice little flat market today, and again, we had a lot of earnings announcements ever since yesterday the market closed. We had Google coming out, then after Google this morning we had Citigroup and General Electric coming out, so really it's been a flood of earnings. Now, Google yesterday was an interesting one. We saw initially Google bid up, then the CEO made comments on the press conference there, the conference call, and Google sold off, and now Google has regained some of its luster and is actually nicely higher on the day, just about $3 higher, but nonetheless, look at the volatile intraday activity on Google here. Here's the chart of Google. You can see initially it gapped lower, then raced higher all the way to $400. Remember, 400 is a key resistance, even number level, and then has sold off since, and in fact getting a little bit of a bid up here over the last 30 minutes. Now, the markets have actually caught a little bit of a bid over the last 30 minutes, and I'm going to show you that on the spiders because we actually broke a key level. Notice this level right up here, folks. This level coordinates with the highs of the day. See the high yesterday on that candle? This is actually the first candle of the day, the second candle, third candle, fourth candle, fifth candle. All these candles on the first daily chart here, we're looking at the intraday 10-minute, all touch this upper level. So what you have to do is recognize that as the high of the day. You need to put a resistance line in there. I drew mine in right here, and you knew later in the day when we hit it, it would be resistance. And sure enough, look at this. Hit, 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 multiple hits, and then finally has broken out. Where would you expect it to go? Absolutely, the high of yesterday, which was the high, recent high, probably about a 3-month high in this market, or 2-month high in this market. Just fantastic move here, and it's just been an ultimate move to the upside as the market has now hit the double top from yesterday, and this is now resistance. 87.15 remains resistance, all right, folks? So keep an eye on that, and we'll continue to watch that. Okay, number two, guys, I want to talk a little bit about a few other things here in the charts. We're going to look at what we saw today. Now, again, this morning, Citigroup and General Electric came out with earnings. Now, the interesting thing on Citigroup here is that initially, I was watching earnings come out, I was analyzing earnings, and Citigroup actually, and this is only current market data, so it starts from 9:30, but I'm going to tell you a little bit about the pre-market data here. The pre-market data was as follows. What we saw was the Citigroup coming out with good results, General Electric coming out with good results. Both started to move up rapidly pre-market. In fact, Citigroup went as high as $4.60+ pre-market before dumping out starting at 8:30. Really around 8:39 it started to dump out, actually sold into the open and then got a little bounce right before the open, gapped higher by about a dime, and then started to collapse. And look at the sell on Citigroup here. All the way back down, and then all of a sudden caught a little bit of a bid. Now, the interesting thing is this, guys. Why would the market be catching a bid midday? Why on a Friday? Why? Could it be options expiration? Could it be the lack of volume that we've been seeing in this market? There's just no volume. Even in Options X week, notice how late to midday you're seeing these markets float up. That's a pure stipulation of light volume. Understand that light volume in a bullish period, which we're in right now, is going to lift the markets up generally. Okay, and I'm going to show you that on the spiders here. Let's go to the spiders, and notice yesterday what happened here. Look at this move up late in the day, all right, on very light volume. Options expiration week is always a whippy week. We saw a whippy week. In general, see what you're doing today. Notice the light volume. You had decent volume at the open, and look at non-existent volume all day long, which is the general thing that happens on options expiration Friday. And again, by basically 11 o'clock, options, a lot of the options stuff is taken care of, and that allows the market to float up. Now, I just had called out a resistance point. This purple line right up here, matching the high of the day. Look at that, guys. Nice little pullback right off of that. You got a little bit of a red candle, and you can see these are your resistance levels and support levels on the market. This one was resistance. We called this out earlier this morning in the chat. These are all the same lines on the chat room that we're using right now. Whether or not they change in the afternoon, that's up in the air. But nonetheless, these are the same levels, folks. So notice how this was resistance. You broke it. You made a move to the secondary resistance point up here at around 87.15. You hit that, you're getting a pullback, just like you got a pullback off this one over here. Now, just a couple notes. Notice on the downside how we moved and started right here on the market, and you actually sold off. Where did you hit? You hit this resistance level. What is this resistance level in orange that I'm showing you? All right, now I did it purposely in different colors so I can show you guys. This resistance was the high of the markets over the last 2 months prior to the breakout yesterday. And that's why it's an important level. You have to understand, when a market makes a high and pulls back drastically or decently for a few days and it retests that high, it's going to be resistance. Just like this one is resistance today. Now, this one wouldn't be as strong. This one actually hammered on the orange for multiple days in previous instances, but nonetheless, this was resistance right here at this 86.60 level, and then when we hit it and broke it, it now becomes support. So notice how the market hammered on this orange line multiple times. Finally, after about 4 to 5 candles of hammering on it, it actually broke through. Where did it go? To the green line right here, which is also coinciding from this gray line sloping up. This is what we call a necktie support level when you have two crossing moving averages. And again, I'm going to show you where these are coming from, folks. All right, first of all, the gray one. Notice how the gray one starts here, connects through the lows right up to the high, and it just continues to the high right here, and it continues all the way up. So literally multiple days ago, notice how the market hugs it right here, bounces down, hits it, then finally breaks above it. Now on the way down, it's support right here. Beautiful support line. Can't ask for a better support line than that. So just remember, these lines are very, very important. This is hardcore trend line analysis. This is partly to do with price pattern timing, the way that we're able to label these levels so intricately and so precisely. And this is exactly what we talk about and teach and give guidance off of in our nightly videos, which are 30 minutes long on the markets. We go over the daily charts, the weekly of the markets, oil, gold, various stocks, you name it, the dollar we cover, and all this on a technical basis. And that's the importance. We don't mess around with any of that nonsense Wall Street fundamental junk. It's non-existent. It doesn't matter. All right? If you saw the earnings on Citigroup this morning, you would have expected that company to be soaring. It did early, and then when reality hit and the technicals hit, you could see that the fall today is it's negative today. So these are all your lines going back, and you can see how big, how long they go back. Nonetheless, folks, let's talk a little levels right now on this intraday chart. Number one, resistance. Your current resistance line you're watching for the afternoon session here, 87.15. If you break 87.15, 87.50 to 87.75 will be a major, major level. Watch that level, folks. All right, on the downside here, if you come down and test this former resistance level, now support, at about 86.80, 86.80 to 86.90 is going to be a lot of support on the downside. If you break that, you're looking for the 20 moving average. You can follow that yourselves and find out where that is. The next major level will be 86.60 and this gray trend line. You want to follow this trend line because this trend line, this gray trend line is sloping, so it's going to curve above that 86.60 level soon and actually be a more important one. This is the one I'm really looking for a break, and then I think we start testing more downside. All right, but nonetheless, you double topped here today. That's a beautiful double top. You can see how the market kind of halted there and pulled back. That's what you want to know. As a trader, whether you're looking at the daily chart, the weekly, the intraday, 60, the 10-minute, whatever it may be, even if I'm a swing trader or an investor, you have to know these rules because they apply to all those charts, as we always talk about. All right, so again, this level up here, then you have the supports all the way down, ultimately the 50 moving average, and then 86.20. At that point, if you break that, you're coming down to around $86 or 85.90 to 86 right down here, and these levels will continue to be very, very important. All right, watch those very closely, folks. All right, in fact, I'm starting to see a new little trend line here developing live. Let's just see what we got here. Ooh, look at that one. This is a great one, guys, and I'm doing this live with you. I just found this one. All right, so notice connect the low here to the low here, and then connect it to the low right here, and it connects right to the low of this pullback candle and where you got to bounce. So now all of a sudden we have a new support line that's curving up even sharper, and now you're going to watch for that initially to break. Then you should test the lower gray line. Those two lines, very, very important. The sloping ones are always a little more important, except for double tops and double bottoms, in my mind, than the other levels, guys, because they're curving. Not as many people know them, therefore they work much better. Remember, as a technical trader, as a technical chief market strategist, I'm all about doing things that no one else does. You can be unique in this game, you will make money. If you are not, you will not. I mean, it's as simple as that. If you do what everyone else does, which is follow MACD, RSI, sometimes it works, sometimes it doesn't. The fact of the matter is, MACD can remain oversold or overbought for long periods of time. So can stochastics. RSI can be in the overbought territory for tons of time before it falls. You can get squeezed and so forth. It's using these key levels that's going to make you an expert trader. So I do encourage you to come join the research center at InTheMoneyStocks.com. Tons of services, pro trader watch list, nightly videos, daily market reports, technical tactic videos, hidden gem videos, all that stuff inclusive. In addition, the chat room is always a pleasure, guys. We have a huge group of traders in there now. We have a great time with them. Many of them are just top-notch traders now, as they've been with us for a year or two consecutively. It's amazing stuff, guys. All right, quickly look at the 60-minute chart here. This is really what you're looking for, folks. I'm just going to draw on the main lines here. Your upper level right here, your double top is what you're watching. That's what we just hit. On the downside, you're watching this level, and then right here will be another level. Right there, and so forth. Alright, those are your main levels on the way down. Have a wonderful rest of the day. We hope you join us soon, and take care.